Welcome to Real Estate 360 with real estate expert Kenn Renner. I know we're going to talk about numbers. We're going to talk about days on market. We're going to talk about a lot of things today. But big picture, how is the real estate market in Austin and Central Texas in general?
In general, it's slow. It's flat. So,
Flat.
Yeah. So how you doing, Sandy?
I'm good. Summertime in Austin, Texas. And
Different kind of summer this summer. We got a little bit of rain.
It's been kind of mild, a little bit.
Yeah, pretty.
I was wondering, I lived on Lake Travis for 15 years, and for 5 of those years it was a drought. Then the lake came back, and we put a for sale sign in and sold it. I'm wondering how many of the Central Texas homeowners that live on lakes are thinking about selling after this last drought.
Yeah, I saw the, I used to live overlooking Lake Travis, and there was a thing called the Sometimes Islands.
Oh, yeah.
And it became the Sometimes Peninsula.
Yeah.
Because you could actually walk out on it. So I was planning on going out there. I mean, it's underwater now, but I was going to put a for sale sign out
on the island,
or a Christmas tree or something like that. Yeah. So now, it's all changed. So even though it was a tragedy with what's going on, but it was also silver lining is that the drought's over.
Yeah,
pretty much. I mean, Canyon Lake is almost full, and Lake Georgetown is over 100% full.
Right, and Lake Travis is right at 90-something% full.
Yeah.
Right now it's rising.
It's something to be compared about the whole lake level and about real estate.
Oh yeah,
it goes out slowly and then it comes back in a flood, and that's kind of unfortunately, but that's kind of the thing that's predictable about the Highland Lakes is that they always fill up eventually,
and it doesn't take long.
No,
once it starts raining in the right spots, it doesn't take long.
Right, and that's a good analogy because I think that's what's going to have to happen to our market. In fact, nationwide, but also here in Austin, is that we have a pent up demand of buyers. They're just waiting on the sidelines, and we've talked about this before. We've been doing this for 5 years. This podcast, really. Remember, it was back pre-pandemic we started this.
Yeah,
and the one of the things the news is always putting out news that's actually usually old and behind. And us in the street, with the boots on the ground and beating the streets, we know what's going on in the market. And so the bad news about the 20% drop of prices in Austin and everything, well, that's old news.
Yeah.
It's old news. And right now it's flat, and the stats will show that we're flat. But there's sellers are holding off. Even though there's more inventory being put on the market. So the bottom line is that if you don't have to sell, you shouldn't be probably trying to sell in this market. Because you're competing against people that need to sell. So that's why I talk to my clients about, if you don't need to sell, maybe you should, check it out, wait out, because there could be some more downward pressure.
There's also, and I think we've discussed this before, the need to sell is really the thing right now, because you're not going to find people that just want to sell because they've locked in a really low interest rate.
Yeah.
And what are they going to do? Trade in that low interest rate for an interest rate of today?
Yeah.
No.
So the interest rates are 6.75, 7%, except the builders are getting them down in the 4s and 5s.
Right.
So that's one of the wild cards there. But the bottom line is that I tell people, try to keep your first home, because if you keep your first home, what a great investment it is. We go all the way back to the 60s, where my rich dad, poor dad, where my dad bought a VA loan in San Mateo, California. Bought a house for $17,000, zero down.
Yeah, that
house would have been worth over $2.2 million now.
Yeah,
he would have been an accidental millionaire. That's what I call an accidental millionaire. So just keep in mind that first property that you have. I still own. Okay, this is the funny thing. When I moved out to Lake Travis, I did not sell my previous residence. It was in Round Rock. I knew near Apple, all that. I mean, why not? Why just keep it? Why not just keep it? And I refinanced that thing 6 times between the time I bought it in 1998 and the time that I still own it now. In fact, last time we did it was a couple of years ago. We're not going to get much lower than that. But, so that house I paid $210 for. 3,400 square foot, beautiful house, and it's worth about $800 now.
Yeah.
So it's just buy. It's not buy real estate and wait. Don't wait to buy real estate. So I think the big window of opportunity is going to come in the next 3 to 6 months, where we're going to see people that need to sell are going to bail and run. But if the interest rates even come down 1%, we're going to see, just like we did last year, we're going to see a flood of buyers in the market, and then your prices are going to start. So everybody tries to predict the bottom. We can look in history, the last 3-4 years. Actually, it was this month. 3 years ago was the peak.
Right.
It seems like it was like yesterday. But I'm going over the stats here, and we're going to compare that, and we're going to also see where's the growth happening, because Austin's now the 11th largest city. We got bumped by Jacksonville from the 10th largest city to the 11th largest city. And so, but we're still an amazing economy, and it's still a huge city. But the inventory right now is 15,360 homes on the market. Mm-hmm. That's the highest ever in history.
Really?
So, yeah. Last June it was up to 14 something during the summer months, and that was the last time that it was. That was the last peak, and before that it was 2011. Mm-hmm. So we had back then about 13. That was right after the apocalypse, the mortgage apocalypse. So we had about a little over 13,000 houses, but also we had 500,000 less in population. So what we're seeing is we're going to see continue. I'm looking at the stats. We're selling about 4,000 houses or 3,000 or 2,800 last month, and then we've got 4,500 new listings. So we're looking at adding. It's probably another 1,000 properties on the market between what's being put on the market and what's actually selling.
Right.
So we're coaching our clients because we're saying, if you don't have to sell them, maybe you should lease it out. And that's actually becoming quite the topic because people, like I have 2 clients right now, both took jobs in different cities, right in Santa Rita Ranch. And I'm saying, here's your numbers to sell it. But if you lease it out, and they're going, I have a 2.75% interest rate on that loan. In 10 years, what's this house going to be worth? They're starting to think the right way. Mm-hmm. It was a great investment when I bought it. We already pulled cash out of it. And, it's like, so, but most realtors don't educate them saying this is a great rental property. This is a great investment. And the thing about it, these people that they're trying to sell their home, the lesser expensive one was $430,000. Not bad, right. Median price. But the payment on that, even with a down payment, it's going to be around $4,000 a month. You can now rent that same house for $2,400. So the bottom line is affordability. It's $1,000 or more than $1,000 a month less to rent. Come on, a couple grand really to rent per month. So affordability is going to come into play in that. And so there's kind of a good dynamic, and we're seeing a lot of leasing. We do help out with leasing, and then also with property management on a limited basis. But we have our other property managers, our team. So let's get into stats real quick. So in Austin's the 5-county MSA is 449,000 is the median price. That's a 0% increase or decrease from last year.
Like you said, flat. Yeah, flat. Flat is the key word today.
Flat. Well, flat's better than drought, and it's better than flood. So we're calm waters now. Yeah. The median price in Austin is 587, which, by the way, is getting back up to. It is down from the peak, but of 2022. But we're going to go into some comparisons with year to year here in a second. Just because you've studied the past, you kind of predict the future. And that's what people come to me for. So looking at 15,000 homes, just over 15,000. Days on market, 72 days. So a little over 2 months on the market. Not bad.
Right.
And then 5.5 months of supply. So that's headed towards that buyer's market, which is great for buyers. And I forgot to bring my home buyers book in because by next time you hold me accountable, I've got revisions to make it to bring, because I wrote it in 2011, 2010. So I'm making some revisions. I only got a few more pages to go. And so
and you're going to re-release?
Yeah, we're going to re-release
cool.
it. Yeah. Because what's going to happen is home buyers are going to come back out of the market, and they're like, now what do I do? And that's what we do. We educate them, and then we educate them, and we get them financed, because you're in the mortgage business. And,
right.
And then we get them a home in these great deals. And so, there is a good video from Nick Gurley of Reventure app. It's a rather big YouTube channel. Never really liked his stuff because he was a doomsayer, doomsday, real estate going downhill, and have all these stats and everything. He actually lived in Austin for a while. He's kind of got a national presence now. But at this last video, he said was the most optimistic I've ever seen him talk, and he's talking about Austin. He actually used to live here. And so I watched it.
That name sounds familiar to me.
Yeah. Reventure it's like an app. I'm not promoting the app, but I am going to put this video link of his. It's 11 minutes in the comments, so people can see it. But that's just not. So it's just not me talking about this.
Right.
There could be another, according to him, anywhere 3 to 5%, 7% drop in prices, which I could see that there could be. But what we're going to really see is opportunities for those that really, really need to sell. Where they can't make the payments or whatever, and we're starting to see even short sales potential, because one of the houses I have in Santa Rita Ranch he bought it at $600,000 with a VA loan, 0 down in 2022. What do you do? So I
feel like there's a lot of people that bought back then that may end up having short sales. I hope not.
But if our real estate world be educational and the mortgage world be educational. You know, those VA and those FHA loans are assumable.
Right.
And they're probably going to have a great interest rate. And so there's all these underlying, you know, about 30% of the market was government loans. And they're for the most part, they're assumable. And so, you know, did your realtor talk to you about that?
Right.
So you can talk to me about it because if you have an FHA or VA loan, that's gold right now. That's a great marketing tool if you need to move. All right, so we got the stats. I also want to kind of take a look at leases because that's kind of important, especially for our investors. And I'm an investor here, obviously. And we're looking at a median price of $2,300 a month and flat, 0% up or down from last year. That is down probably about 18% from the pandemic peak. But days on the market, 35 days, not a big deal, month on the market. 2 months of inventory, so we're not flooded. Right. I was assuming when I started looking at these stats that we're going to have, because people that can't sell, they're going to lease it. And I was expecting those months of inventory to go up. I haven't seen it yet. And it probably will as people decide that maybe I should, because of watching podcasts like this, maybe I should keep my house instead of selling it. It's a great idea to keep it rented out and then go buy one of these builder homes that's offering, you know, super deep discounts and then 4.5%, 3 3/4 interest rates.
Right.
No brainer. So that's kind of the story was going on 97%. So almost getting list to rent price ratio. You're almost getting what you're asking pretty much. People don't negotiate a lot on rent, sometimes a little bit.
Right.
So that's kind of what we're looking at is I think the market's is poised to, that people that are scared of buying or just on the sidelines, they're going to rent. That's good for us landlords. You know, those that are trying to sell but can't sell and don't want to continue to make a big payment on an empty house, they need to rent. So leasing comes into place. So, you know, leasing is a lot of work for the money, but if that's where the market is, that's how we serve our clients.
Right.
So, but we also, if we do have quite a few homes that are listed for sale, and they're listed very competitively, starting in the low 300s right here in Austin. But I do want to compare, because we talked about the waves, you know, the waves and the floods and the droughts and things like that. It's kind of like the real estate cycles go up and down, but in California and Texas and the coast are different kinds of markets. We've talked about this many times on it, but I want to give you a case example because this would kind of illustrate California market is much more volatile. In other words, it goes up faster, it drops faster, it goes up faster. And that's been going on in a small way for the last 40 years and in a big way over a 10-year period. You'll see it like Texas has been kind of like this until this last peak, but that's pretty much. And the charts and the pictures will show it too. So the first one, I want to compare my own house that I have on Dodge Cattle. It's in Avery Ranch. It backs up overlooking the golf course. A nice house, 2,400 square foot, built in 2005. In 2020, according to Zillow, of course, I'm not going into CMAs, but according to Zillow, I like their little charts. I'm not saying those estimates are accurate, but they're accurate enough to show what the trends are. 344,000. In 2022, it peaked at 680,000. That's in 2 years, it doubled. And then it dropped to today, it's 524 in 2025. And so that's down about 20%, but it's still, compared to the 344 that it was worth in 2020, it's
Not
still
bad.
almost double.
Yeah.
So people are like, oh my gosh, the sky's falling. Yeah, if you bought in 2022, you're going to have to come talk to me, and we'll have a serious,
a difficult conversation,
strategy session. But if it's any before 21, 20, you're doing fine. And then taking a look at the Bay Area this is Mr. Bill's house. I use him in my presentations. He's the guy that sold this house on Guilford Lane for a time, I think it was 1.4, 1.5. And then he bought 9 houses in a real estate exchange with me. I actually talked to him yesterday. And his son is a real estate investor. And so that's another thing he lives in the Bay Area. He's a realtor in the Bay Area, Bill Jr. And I've interviewed him on my podcast too, about, maybe you should not buy a house in the Bay Area at $2 million, and maybe you should buy some investment properties, like for the younger generation coming out that are making double 6 figures, but they can, the numbers are right here. It's 1,100 square foot house built in 1947. Now it's worth 1.7, and but it would rent for about 4,500.
Wow. So
for 1.7, you could buy 6-8 houses from us and have more like 15,000 income. So I would say if my kid was graduating from Stanford and was thinking about staying in the Bay Area, I'd tell them rent, invest your income in income producing property, because you're going to be throwing away your money. So look at that. 2018, when I met it was 1.5. And for whatever reason in 2018 and 2020, the value dropped to 1.1. That's a big drop. That's 400,000 on one house, one little 1,100 square foot house. Then it jumped from 2020 to 2022, kind of on parallel course with Austin, which we were 1.9. Oh my gosh, almost double. I mean, it's $1 million for
it's
one
a $1
little
million
house.
swing.
Yeah, and then in 2023, it bottomed out at the last cycle to 1.6, so down another 300,000, and then today it's back up to 1.7. So, and then much more volatile, and so that's why the stability of the Austin, especially our submarkets, which are doing really well, really really well, and we're still seeing homes that we're purchasing, really nice ones, under 200,000, 1,400 square foot, 3-bedroom, 2-bath with a 2-car garage plus a study. I mean, brand new.
Sounds like the American dream.
Yeah, well, we talked about, this was happening in Austin. The biggest migration of people into Williamson County, which is the suburbs. Everybody's moving to the suburbs, is from Travis County.
Yeah.
So Travis County people are moving to Williamson County because look at the prices. The 587 is the median price in the city of Austin. You go 20 minutes north, and your price is going to be $449.
You say they're moving to Williamson County, but they're still building a lot of condos in downtown Austin and South Congress and that whole area.
Yeah,
too.
that's for the yuppies, the Gen Zers and all that.
I always say young people they go and they live in I don't know how they afford to live there, but then I was like, they'll get it out of their system. And they'll move to Williamson County.
Yeah, it'll well when they want to start raising kids and have a dog and they're tired of parking in the parking garage. I get it, and I was young too. If I was young and rich, I'd probably do that. But the suburbs is where it's at, and that's why because you go 20 minutes north and you're over $100,000 less than the city of Austin. Well, if you go 50 minutes north or south, where we're buying in our submarkets, we're looking at half. We're looking at homes of 220,000, 250,000, and so we're looking at like really 50% of Austin prices. So that's where we're seeing people are moving to. They're renting out there. They're getting much more value for their money. That's a much more calmer lifestyle, more family friendly.
Sure.
So that's kind of where we're headed. And that's where we invest in. I'll show you the charts with the rent to price ratio. People are going to continue, if they can't afford to buy, they're going to rent, and that plays good for our investors. It plays good for for filling up our properties, and all of them are positive cash flow. Like I said, these houses are under 200,000. We're seeing between 200 and 300. Austin's coming back in the market, so we're seeing homes under 300,000 brand new again, and those I'll show you some of those stats. I mean, those are the ones that are available. Take a look at these properties, and then give me a call, 512-423-5626. Kenn Renner, and I'll be more than happy to talk to you about investing in some markets or pulling back into the Austin market as this market bottoms out over the next 3 to 6 months.
Hey, you've been spot on for the last 5 years with the way things are going. There's no reason to not believe you now.
Well, I did predict there was going to be an emigration here, but I didn't predict that there was going to be a pandemic-driven, a mass exodus out of these areas to us. But
and you didn't predict that the Fed hadn't cut rates yet either.
To 2.5, yeah. And so remember, just because you buy now at 6.5%, you're buying your first home. I bought my first home; it was 9%. But remember, I refinanced my second house six times.
Yeah.
And many times I pulled cash out and paid off other debt or bought more property with it.
Right.
So keep that house if you can, and invest the difference.
Kenn, always good seeing you.
Good seeing you. See you next time.